Morning, hope everyone is well. Wednesday the 25th of October, so getting the briefing underway, and what we'll try to do is just wrap up a little bit of what happened last night. I did see a couple of people, I feel like I'm becoming slightly like Donald Trump. There was a couple of people tweeting me last night at around 7:30 PM asking me about what was going on in the euro-dollar pair when there was a bit of a spike in price action. So we'll talk about that. We'll also talk about some data points that have come out overnight, particularly some focus on the Aussie currency because that's seen some pressure on the back of some inflation data. And then we will look ahead to what's to come for the session ahead with some focus on UK GDP and German IFO data for today. So it's the agenda for the briefing this morning. Looking at the charts then, and really I guess starting off with how the US closed yesterday evening. And we did manage a slightly positive close. The S&P up 0.2%, the Nasdaq was up a similar margin. But it was the Dow that was up 0.72%. So outperformance in the Dow Jones Industrial Average. As we were talking about yesterday, one of the key catalysts there was earnings, which have definitely started to pick up pace this week. And Caterpillar was really the catalyst that kicked that off. And Caterpillar being seen as a bellwether stock for the health of the economy. And when you think about it on a breakdown of their earnings, if they're reporting North American, European, Asian demand in terms of their products for construction and materials is up, then generally speaking that's seen as a net positive overall, as not just for the company and its profitability on a micro level but also on a macro level. And so did see a bit of a pop in the Dow on the back of that. That was then followed by the likes of 3M, who exceeded expectations. They also, as Caterpillar did, increased their full-year outlook on their earnings per share. And each of those stocks rose approximately 5% each. And hence then the outperformance. There were some other good earnings as well to boot. So decent day on earnings, and also getting you up to speed with the latest on the tax reform issue, because I think this is something we do need to keep a close eye on. And Politico reported that the House Republicans will introduce their tax reform bill on the 1st of November. And so being, if anything, incredibly impressed by the timeline they've been managed to put forward some more of these added details to the corporate tax plan. One thing then is, if we are starting to get specific timelines laid down by the politicians on Capitol Hill, if they fail to deliver or meet those deadlines, then that could be interesting at this point, given we've been trading at record high levels in equities. Does the market start to kind of, if we do have a delay, just step back, reevaluate the situation, and actually this corporate tax plan is going to be a while before it gets implemented, and so it takes a little bit of the fizz out of this kind of rally that we've had so sharply in the US equity market. So that was last night, and the Nikkei overnight has broken its 16th consecutive gain streak, and so that was, I guess, is inevitable in a way, just a slight pullback from those levels that it had reached. So having a look, firstly, just because we've just spoken about earnings, I just wanted to refresh your memory a little bit about the page that you should be looking at every day now, given we are in the midst of earnings season. And this is the Bloomberg earnings calendar. You can just find this by searching it on Google. But essentially what you can do is, and what I would do definitely, is every day, so it defaults to the US, I would just skim through, so it goes to today's date, but you can forward look, so this is when the kind of prudent planning comes in. Just see who's reporting. Now, people like Advisory Board, even Aflac, Alaska Air Group, Alexander and Baldwin, companies like that are not going to move the index futures that you guys are trading. What you're looking for then are larger market cap stocks. So if we start to scroll down, someone like Amgen's pretty big. If we continue going, here's a fairly large Dow component reporting later on today. Boeing, they will be pre-market. And basically you just go on and on. We've got Vass's favourite company here, Buffalo Wild Wings. But again, small market cap, so they're not going to have much of a market impact. So this is what you should do every day. Try and identify any outlying big companies, or the other way of looking at it is like Caterpillar, there are some certain stocks. If you think about UPS, for example, obviously if people are sending more packages, then essentially the way the market looks at that is that's a healthy sign in terms of economic activity. Obviously it's not an exact science, but this is the way that the market tends to lean on these earnings reports as to kind of gauge sentiment on the day-to-day movement. So it's quite important to monitor these. Same thing, you can go across the different countries. So for instance, if we look at Germany today, you've had Deutsche Lufthansa earnings that have come out. Actually, in terms of European earnings, it's been more French focused. Kering are up nearly 7%, Air Liquide are up 2.3%, for example. But if you go to tomorrow for the DAX traders, you will see that you have Deutsche Bank, Deutsche Börse, but most importantly Bayer, which is one of the biggest companies in Germany, is reporting pre-market tomorrow. So these are the things where, obviously, while I'm here and you're with Amplify, I can point these things out to you, but you know, you cannot be trading the DAX tomorrow morning without knowing what Bayer's earnings were. And I would hope that as you go through the program and beyond, that you're doing this kind of preparation work so you do not get into a situation where you're not fully informed about the decision that you're making when you take those trades, especially early on. Okay, so going back to the euro currency, let's have a look at this movement here. Let me just identify the price action I'm looking at. This was the one that people were asking me about last night. This is because we had a big pop in the euro, about 30 pips, and then it came all the way back down again. I think if we look at this on a minute chart, it might start to make a bit easier to understand. So at roughly 7.45, euro dollar started to move up, and then it snapped back lower at 5 past 8. Now, I've just been having a bit of a scan through some of the timings of the headlines from last night, but overall this is the story that was causing that price movement. And the reason why it went in twofold or stages of price reaction, i.e. euro dollar bid and then it fell, was because of the way the news kind of was leaked out to the market. But this is the summary of it, and it's Trump. So the president had asked Republican senators for a show of hands poll on 2 candidates he was considering to be the next chairman of the Federal Reserve. So essentially, he just basically did a straw poll. Who do you guys want? Do you want Taylor or Powell? And one of the senators said that even though there was not a definitive answer that was seen, and actually not everyone voted, but according to this one chap, he said, I think Taylor actually won it. And so what happened then was, when some of the first headlines were coming out, they were a little bit more unclear about the situation, and actually started to move higher in the euro-dollar pair, because it looked like Powell might be then, which is probably the consensus overall on who's going to win the race at the moment. But then there was actually a definitive headline that came out saying that it was Taylor that won that vote. And obviously Taylor being deemed by the market as the most hawkish, and so the dollar strengthened and euro dollar fell back on the release of that further information. Not to look into this too much, because ultimately if you actually look about an hour after this period had passed, we basically settled exactly back to where we were before the information even came out. So the one thing I think this does show is the market's sensitivity to this decision that's going to have to be made in the coming days and weeks about who is going to replace Janet Yellen. It looks at this point as if she will be replaced. It's not a done deal. She could still maintain the position, and if that were the case, I would expect, and this was a question again that someone put to me yesterday, if Yellen was to become the Fed chair, how would the market react? And I think the answer to that is a twofold reaction. I actually think the initial reaction would be a dovish one, i.e. the dollar would weaken and stocks would rally back to these all-time high levels, because in the candidates that are available should be deemed as the most kind of cautious one out of the bunch. But ultimately, let's not forget that this isn't really a case of doves and hawks, because they all are all, in a sense, hawkish. If you think about what Janet Yellen is doing at the moment, she is about to hike interest rates in December for the 3rd time this year, and she's going to hike multiple times next year and beyond. So it's not like she's going to hold rates steady, reinitiate QE. She is in fact the person that has begun quantitative tightening of the balance sheet, as well as a multiple sequence of rate hikes. And so let's not detract from the point here that she is still on a hawkish side. So I actually think the initial knee-jerk response would be a dovish one. The overall response, I think, would still be a more hawkish one, because you would then have the continuity to follow through on this policy going forward. And certainly this has been much of what the press have been talking about this morning. You can see here the FT talking about US Treasury yields have hit their highest since March now, ahead of this Fed pick. So if you think about it as well, and on the backdrop of this, obviously you've got a lot of conversation happening about this fiscal situation, with the corporate tax plan seemingly coming forward on a much quicker timeline than I think a lot of people expected just a few months ago. And in combination with this risk that someone like John Taylor could become the Fed chair, is creating already a bit of pre-positioning for potentially a more hawkish Fed going forward. Actually, while I'm on this subject, let me just bring up, there was one more thing I wanted to show you on this subject, because I was giving a lecture yesterday about the Fed members, and one thing to be aware of, I know most of you are already up to speed with this, but for a bit of a refresher, every year there is a rotation of several of the board members who get a vote on the FOMC. Now if you look at the ticks, these are all the people that can actually cast a vote as part of the Federal Open Market Committee. The X's are those which attend the Fed meetings but do not cast a vote. If you actually look at the scaling doves to hawk spectrum here, you'll see that the top or most hawkish, the 5 who are most hawkish, do not have a vote at this point. But when you go into 2018, you get 3 of those candidates. I think Mester's the one who's fairly vocal and talks quite a lot. She will have a vote in 2018. Not only that, you could potentially lose Yellen, which would be deemed as being more on the hawkish end of the scale. And then if that gets replaced by John Taylor, then all of a sudden you've got 4 new hawks. So if you're looking at the composition of the overall policy kind of bias, if you like, of the FOMC, that would take a distinctive shift to being much more hawkish. And so this is what the market's weighing up at the moment, and this is why this decision about the Fed chair is really a very important one. And certainly if it was to become this very hawkish slant to the way that they think and the way that they govern policy, with equities up at these levels that they have been, obviously tighter policy, more quicker normalization process would generally be a negative for equities. So at these valuations, definitely will be interesting going into 2018. Okay, moving on, different subjects. Let's look at the Aussie dollar. So decent move seen overnight. You can see this here. This came at 130. This is when Australian CPI data was released. If I start to look at this a little bit more longer dated, you can see technically a significant level. If you were early enough, a potential good short classic entry emerged overnight. So again, for any of the night owls, you could have potentially got into that trade at that point, because it came exactly back to that previous breach of the October 6th afternoon low. So the data caused that, weak CPI numbers, the price popped lower, hit that level, and now here we are at session lows as I speak in Aussie dollar. Now looking longer time frame, the reason why that level is so significant, breaking that October low, was because if we look on a daily continuation, we've not actually been this low in the Aussie dollar since the summer of this year. You've got to go back to really the 14th of July, the last time the Aussie was this weak. So that was why that was so significant. So if you were up overnight, you managed to get that short on. Obviously the 177 handle is the obvious target. That's also, just looking on the daily charts here, just testing up at around the late June high. Any push beyond there, I'd probably say targeting then the mid-June highs that were seen around 76.36 if you're keeping that short in play. And so weaker Aussie in combination with this dollar strength on the Taylor stories that seem to be dominating at the moment would help play into that strategy if you were looking at the Aussie currency. Okay, a few other things to mention. This really isn't so much of a market mover, just something to make sure you're up to speed with. This is China. They've obviously had their Congress meetings ongoing. We've seen quite a monumental step in the last day or two because Xi Jinping, the president, has basically been elevated in his stature in terms of seniority in China, which hasn't happened in a very long time. But what has happened is, in China, essentially they have the most powerful people in the country is known as the Politburo, and what tends to happen is a change, much like what we're looking at with the Fed at the moment, is a change of leadership. Now, this chap, this is Xi Jinping and Li Ka-shing, so this is the premier, the president and the premier. Now, both of those have stayed in place. And what's happened is the other 5 chaps here have all, these are all new people. Now there is one just rule that happens generally in China, is that if you're going to become new member of the Politburo Standing Committee, you cannot be aged over 67. And so what typically happens then is these chaps tend to be fairly young in order to then have a succession plan for the president. But this hasn't actually happened, which means that it seems then that Xi Jinping will stay in command as the top dog, if you like, for the foreseeable future, which could mean a matter of decades, essentially. Now, what does that mean from a market's point of view? Well, I think this is actually quite important in a sense that it does mean continuity in terms of China's policies going forward. Now, if you think about China, I mean, even when I think about it from when 10 years ago, the changes that they're going through, both socially and economically, have been quite astonishing, really, when you start breaking it down. And actually, under his leadership, then you would foresee that this will continue at a similar pace to what it has done over the last decade. So actually, I think this is quite a positive for China. In this kind of pursuit of becoming a legitimate global world trading partner. And certainly I think this is probably what's played into the hands of Xi being back to stay in power. One other thing I just wanted to mention, I know we don't look at this really, but it's good to be aware of what's going on in the world. And there's been a bank bailout overnight, but it hasn't happened in the Western world, it's happened in India. So essentially, the Indian government has stepped in and bailed out a recapitalization plan of $32 billion, which has seen the Nifty was the second best, or actually it was the best performing index overnight in terms of that region. And I include that in the Far East region as well. And so basically what was happening was weak credit demand had led to balance sheets being strained by soaring corporate defaults over the last couple of years for a lot of these banks in India. And I was looking at the Nifty. So for those who are not aware, it's the Nifty 50. And then you have the Sensex, but a lot of the bank stocks are based in the Nifty. And I was just looking at some of the percentage changes. Some of these bank stocks in India, in the local market, are up 30%, 30. So this is locally a very important story that's gone on overnight in India. Just while I'm showing you this portal, this is TeleTrader, and actually you can download this as an app on your phone, and I for one, and I know Jimmy in the chat as well, we find it incredibly useful to have on the move. because basically I can look at any commodity, doesn't matter what it is, I can see the associated news with it, I can see the price charts down to the intraday to the 10-year. Just very useful to have on the go if you have an iPhone or an Android and so on. Okay, looking at the calendar ahead, I want to quickly wrap things up because I know at 9 o'clock we've got German IFO, and IFO is an important indicator. It's a forward-looking measure of companies and their expectations over the 6-month horizon. Now, looking at IFO, this is what the previous pattern has been. Now, looking at the axis at the bottom, this goes back from 2008 to 2017. So if we look at IFO on its broadest measure, which is the red line, the business climate headline, it has been tracking at pretty much all-time high levels. And if we're looking at the expectation today for the figure for IFO coming out shortly, is for the same reading as previous. So confidence amongst companies as well as consumers in Germany has still remained pretty elevated overall. But this number does need to be watched, anyone looking at European assets in the next 10 minutes. Otherwise, moving on, you've got the prelim. So this is going to be interesting. A first look then at the growth potential of the UK or what it had in the third quarter. We're expecting then 0.3%, same as previous. And then going into the afternoon, you've got US durable goods, new home sales, Bank of Canada rate decision. Definitely one to keep an eye on for any currency traders. They surprised. The outside minority of analysts were correct last month in calling the fact that they would hike rates. Now the consensus is that they will keep rates on hold. However, as you can see from the range here, there are some banks anticipating a further 25 basis point rate hike. Just given that fact of the range and also what happened last month, I would say irrespective of what happens, hold or hike, there's going to be a big move in the CAD currency later, so definitely worth watching. And then you've got the the DOE crude oil inventories. Now, the best place to look for what the APIs were like is if you go on Zero Hedge, because they quite nicely just summarize all the numbers that came out. So if we just scan back to basically yesterday, and I can show you the numbers. Here you go. So last night we had a crude headline build of 519,000. Analysts were looking for a drawdown of 3 million. So a bearish headline. However, check out the gasoline number. I don't think not very often I've seen drawdowns in gasoline of that sort of size. A drawdown of 5.75 million. Expectations were for a build of 1.7 million. Distillates was a drawdown of about 5 million as well. So if you actually look at the crude oil chart from last night, the initial reaction was we did move higher. So despite the bearish crude, the significance of such a large miss on the gasoline and a large draw saw prices move higher overnight. And then we've given back some of that, but trade still slightly elevated from when this is where we were trading here. So we're pretty much at the levels where we were when that data came out. So it created some volatility. We moved higher very briefly. In the beginning of the Asia Pac session, we've just kind of clawed back some of those gains, and we're back to basically flat from where we were. So a little bit mixed on the data. Bearish on the headline, but bullish on the breakdown on the gasoline distillates. And of course, we'll have to look out for the accompanying US output figure as well when it comes out. Okay, going to leave it at that because you've got IFO coming out and I want you guys to focus on that figure. It's got about 4 minutes or so now till the number hits. So I would keep an eye on the Euro, the Bund and the DAX. However, keep in mind this number has been at record high levels in recent months. So really, if you're looking for an immediate market reaction to this data, you're probably going to get a bigger reaction if it was a negative surprise rather than a positive one. Because don't forget, the German data yesterday, the manufacturing PMI was quite strong. Granted, the services not so much, but the kind of bias here has been European economic data has been generally better than expected. So negative surprises will create then by default the bigger reaction in the marketplace. That's how I'd approach it if you are going to look at the data closely. Okay, guys, have a good day. Thank you.